Well, good morning. It's about 0800, 804 on the 23rd of May, and I call the SELCO Commission meeting for the month of May in order. With that said, we have the first item for us to consider is the bill schedules and warrants for April. Are there any comments or questions on the warrants? Hearing none, do we have a motion to accept the warrants as presented?
So moved.
Is there a second? Yeah.
Yep.
All in favor?
Aye.
Okay. Then we'll move to our next item is the meeting minutes of April 25th. Do we have any questions or concerns about the minutes as presented?
None for me.
None? Okay. We have a motion to accept the minutes as presented.
So moved.
Okay.
Second.
Second, all in favor?
Aye.
Aye.
Do we have the minutes to sign?
So the next item is the Master SELCO Commission 2003-24 meeting calendar. Because Mr. Beaton's on his way, but not here yet, and we can have to have his input, I'm going to defer that and go to the next one, which is the generation and transmission adjustment subject, and then we can do check the calendar once Mr. Beaton is here. So with that said,
Okay.
Mr.
Sure.
Roy?
Sure, okay, thank you. As you can see in the memo, the punchline is up top. We'd like to remove the charge of 5.25 cents for all rate classes and reset that back to 0 starting in July. And since Becca did the analysis, if it's okay, we'll have her speak to the
Sure.
background.
Good morning.
Good morning. Am I mic'd up here? I am, right?
I
Okay.
think so.
You pretty much said what I was going to say, Chris.
Well, it's right at the top of the memo.
But I guess if you recall, we implemented a 5.25 cent kilowatt or 0.525 charge in February. And our plan with that rate is working. We've successfully recovered a $1.15 million shortfall in generation and transmission revenue that we had in calendar year 2022, which Jim will present a little more on that in his financials. And then through Q1 2023, our revenue and expenses lined up pretty well. So we overcollected slightly by about 1% or 93K, I think it was. So the plan is working, and if we extend the GTA, that same 5-cent rate, for another month, it'll allow us to collect about $2 million as we head into the winter. We're a little bit afraid that things are gonna get hairy again toward the end of the year, so we think it's prudent to overcollect now, so that we have that on hand when we need it. And if things don't transpire the way that we're hoping, or not hoping, but what we're predicting, it'd actually be good if that plan didn't come to fruition, then we have the options of transferring that over collection to the rate stabilization fund, which we think we should do because that fund is a little low based on what we think we should have in there. Or we could always credit back to the ratepayers at that time based on what the markets look like. So that is pretty much the spiel. Any questions?
My only question was, I saw on the chart, they were actually, it was looked like it was in parentheses. Is that meant to be negative for the first?
For the
Yeah.
$1 million shortfall for last year?
No, I thought it was
No,
in the rate
it says
itself.
recent history of SELCO's GTA charge rate below, and it goes year by year, or by quarter when we
Right.
adjusted it, and they were all in brackets until we got to
In parentheses,
September
right?
in
Yes.
2022.
Usually in accounting, that means it's negative, like minus.
Yeah.
Oh,
Like
yeah.
they're
And it
was.
subtracting.
Those were
from it.
credits.
I
Yeah,
didn't
they
know if
were
that was-
credits.
They were credits?
They were credits, yeah.
Okay.
And then when we had the shortfall last year based on the high cost of energy and the demand on that, and not being able to get the rate adjusted correctly to keep it balanced, so we had to recoup. Now we've done that, and now we're going to have a small nest egg coming, as I understand it. And will the ratepayers see that in July, or they will see it in their bill for the month of July? They'll see it in August.
It'll be gone as of July 1. So any bills that come out after that will be gone. So we're gonna really collect on June usage is
Okay.
what the analysis is on,
Okay.
but July 1 will zero it out.
Okay.
So hopefully that's rate relief after a tough winter. know that that charge was pretty hefty.
And there was I thought there was a notice about the average user would be credited back as far as the monies.
That
on a
would be
monthly
an
basis.
option in,
No, I'm saying is that with doing away with the GTA, there's a monthly cost savings, I think. It was what, $30-something or something?
Yes.
Oh, yeah.
So you'll see a decrease of $39.37, or about 27%.
And that's for the average user for electric
Yeah.
okay.
at 750 kWh.
Mhm.
And we will message that too in all the bills to let folks know.
Okay, well, that's good news.
It's a
Yeah.
good reduction, yeah.
Yeah, for once, right?
Hey,
And
well, I think with all the press that I mean, I don't want to steal your thing,
no.
but, you know, with the press of the municipals, the benefits of that, Mr. Roy, you may want to just address.
yeah, I just wanted to emphasize somewhat of my favorite part of the memo, but is that electric rate comparison. And so if you just take a look at our new rate as of July 1 is the first component of the bar chart, substantially lower. But even if you look at the May 1st charges in comparison to the May 1st IOU, we're still half. You know, I mean, these aren't small percentages, lower rates. I mean, these are significant numbers that, again, that we are working on as more and more of the energy sector, I guess, gets analyzed. I mean, these are substantial savings to Shrewsbury, and, you know, just shows the power, no pun intended,
Yeah.
of our business model.
Well, I mean, if municipal power, you can look at, it's fully only a third of what the most recently in the news, Unitil.
Yes.
You know, was a public power, or a private entity that provides power up in the north portion of Massachusetts, where their rates, one lady was on with over $1,000, you know, for a month for her energy costs, which pretty substantial for a small ranch that she lived in. But I mean, the bottom line is, it looks like we're doing pretty well as far as the municipal control of and maintaining low rates. That works out very well.
We will continue to look at this quarterly. We feel like the markets are still too volatile to just go back to our 6-month analysis schedule. So we might be back and change this plan in a couple months, but hopefully not, fingers crossed, that we're good through at least August.
Okay. So it looks like I need a motion to vote to remove the charge of $0.0525 or 5.25 cents per kilowatt hour for all rate classes, and reset to 0 cents or dollars per kilowatt hour starting in July of 2023.
So moved.
Second.
All in favor?
Aye.
Aye.
Okay, thank you. Okay.
Thanks.
Great, let's go back to the previous deferred topic, which is the master schedule, master calendar for the coming year,
That's the bill schedule.
okay? And just like to make sure that any comments or questions from other board members as to availabilities as they see right now. I'm not crazy about having a meeting the day after Christmas, but
Neither
Yeah.
am I.
I won't be here.
yeah, I'll be recovering from my night job. No.
Yeah, we should just,
Anyways, so I would like to say, that is there a better date that we can do it, you know, if we're gonna have a meeting, can we do it like on the 19th of December? That would be my input to that. Anybody else have any other comments of the schedule? It looks like,
yeah, I won't be able to make the July meeting. I'm on vacation that week.
okay,
And I won't be able to make the June meeting, so.
okay. We're down one, okay, but we're still holding court.
Yeah.
What's the June meeting?
The 20th.
June
20,
20th.
it's,
I'm not gonna be here for the June meeting either, sorry.
okay.
Should we push that one?
Well, you can push it. I'm not here the following week, so I'm not available the following week, so, but that's not a problem. If it's just one, then we can, if all four of you are gonna be here on June 27th,
Yeah.
okay? That better? Okay, and then,
So we're gonna change
Change
that.
that.
oh yeah, we'll change that to the 27th on June. July 25th, we'll have one person missing, but we think we can do that. The 20, then we don't have anything in August, and September's 26th. So far, so good. Now we're getting out into the, kind of the ether, so these other ones are placeholders, but it was easily recognizable that I did not want to meet the day after Christmas. January 30th.
Do we want to change that one? Can we change that one to the 19th?
Yes, I think we can. December 19, okay. And January 30th, so far, so good. And the 27th of February, that's not school vacation, so that should be okay. 26th of March, that should be all right. That'll be the scholarship meeting, and then the 30th of April. Again, it's not a school vacation week. So with the changes to June 27th and December 19th, you have a motion to accept the calendar as updated.
So moved.
Second.
Okay, all in favor?
Aye.
Okay, thank you very much.
That's quick.
Okay, which leads us to a review of the National Information Solutions Cooperative, or NISC, Smart Hub Implementation Update. God, that's a long subject. I hope the presentation isn't that long. No. Great.
Good morning.
Mr. Zucco, how are
You're
you?
with me for a couple things today,
Okay,
but we'll start with our NISC update. So NISC is the software that company we're partnering with to use their software pretty much throughout our entire organization. And we just wanted to go over and give you an update on how everything went this last month. So our go live, if anybody doesn't know, was May 1st. We basically went live with billings, payment, our customer portal, service orders, scheduling, provisioning, and there's a bunch of other things, but these were kind of the main items we hit. So taking a look at how things went, here are some of the key takeaways. Overall, there was a bunch of hiccups, but there were no critical failures. And by critical failures, I mean we didn't all of a sudden go live and lose 6,000 customers to service. That was, that's the biggest fear you have out there. There were just a bunch of little things, and things can always go smoother. There's always room for improvement, but there was nothing that was, really life-altering for anybody. Electric definitely went a little smoother than cable, and this is because of a couple reasons. NISC as a company, their bread and butter definitely is electric, and communications is kind of the second type of stuff they do, as well as communications is just a more complex industry, in my opinion. You're offering 3 different services. There's a bunch of additional items like provisioning that go along with it. So that was just one thing we kind of noticed. We definitely got a little unlucky at points. And what I mean by this is some of our former vendor relationships kind of deteriorated, or we had issues with them right as we were going live. So our former billing vendor, they had some internal issues at the company, and we were planning on getting all historical bills for like the last 2 years, getting them in a certain format so we could get them in the new system, all that. They wouldn't even talk to us because what was going on with them was so bad. Our former payment vendor, they kept emailing people after telling them, hey, your bill's due, this and that, and it was causing mixed communications. Stuff like that just leads to additional stress in customer service because you're sending a mixed message to the customers, and it forces people to call up and have some questions. We did have some minor outages throughout it, and some were non-system related, some were partly related, but those just are additional things that, from customer service, help desk, technicians, all those employees, they're basically relearning their jobs from the ground up. That's a very, very stressful time frame. So any additional stuff that could, be removed or reduced, that's huge. And that's where we got just a little bit unlucky on that. We did find that we had a lot of bad data in situations. We went through for a couple months, we had a couple people go in and they cleaned up a ton of different things. But in the end, we did find, and this is kind of a good thing, that we're moving away from these systems that we used to have, but in between like our billing system for cable and our billing system for electric, there was data that wasn't the same. We had about 800 customers where there was different information. And the reason for that, it could be a ton of different little issues, but basically you had one system passing information to another system that then passed information to billing customers and payment customers that would then receive all the billing and payment information back and then pass it over. Well, If adjustments weren't done in the proper system or something didn't pass properly, that caused issues. Historically, we knew that there were some issues with the balancing, but we didn't really understand what it was. So basically, we had somebody go in and one individual scanned through those 800 accounts, and they had to take the more conservative approach to everything to say, okay, what was the lower balance if we don't understand the situation, and we're going to go with that right now because that's the best we can do for some of them. For other ones, it was more, oh, this charge didn't come over, and it's still a current or recent charge, and we corrected those type of things. But what's really nice about this is going forward, those issues shouldn't happen again. We definitely have complex processes and ambitious goals. So one of the things when you're doing an implementation like this is you want to make sure you're not pulling back anything from customers. So if you offered something previously, we want to make sure we're offering comparable things. So trying to keep some of that complexity and trying to have certain things, in one example is someone like Amex. They just don't play nice in the sandbox. They like to make everything just a little more challenging. So we're reconciling our payments. There's just extra steps because we take Amex. And whole process for applying to them, how they fund money, all different. But we accepted it before. We want to keep stuff like that standard. So we notice little things like that to keep the quality that we provide the customer. We have to, we had a little more ambition and wanted to keep that set. The other thing is we did have a lot of challenging customer interactions. While there's a lot of great customers that you deal with and people are very patient and accepting of things, CSRs, help desk, and technicians did get beat up at points. And I completely understand because I'm a customer at, my utilities. I'm a customer when I go out and, shopping and stuff. You should always be able to explain if there are certain frustrations or vent them appropriately. Where I kind of draw the line is where it gets abusive. And we did have a couple examples where people were out of line and, our customer service supervisor did receive the "I hope your dog dies" comment. That was a new one to me because that one just is kind of a low blow. And to me, that's where I kind of draw the line of what is acceptable and what isn't. And happy they weren't on the phone with me at that point. And she doesn't have a dog, so it went over a little better. But it's not indicative of what I think is the entire community of Shrewsbury. But it just, that adds to someone's bad day or frustration or difficult time when you're literally learning a whole new process.
What were some of the examples of issues people were having that got them so mad?
So when our billing vendors sent out the additional emails saying that you owe money, they weren't, because we're no longer using that person, the payment vendor, they didn't have update records. So people just went on, signed up for the new system, and then they got an email saying, hey, you owe us money. The email looks like it's coming from us. We designed it very nice. You could see our vendor name, but it's designed to look like it's coming from us. So those people felt as though we weren't trustworthy. Other things may have been ticky-tacky issues with customer balances, just trying to figure out what happened or what went wrong. There were some service issues. I know with we were trying to set certain people up with service, and there were just issues with their account for one reason or another. Some of it, too, is we learned internal communication flow, what we needed to do in how to get information from one group to another. Because if something's being entered, let's say, upstream by customer service, and they don't realize that there's an issue, and it heads downstream to the help desk, now help desk has more work on them. So it was, a combination of stuff like that certain people, were upset over. Every day was different. You had your ebbs and your flows.
Well, let's see, some other things was marrying of two or because you had to have an email account to the one, and some people had two or more properties or entities they wanted to have the bill all combined, so you had to work around that and get that squared away, right?
And there was a lot of people called up with questions, so call volume time was up to, I think at one point, 25 minutes for a wait. So you have people waiting for 25 minutes and then talking to somebody. One thing we did add is we now have a phone queue. So when you call up, you press a button just if you want to talk to certain groups. We've worked on that a couple times, and we'll continue to kind of keep working on that to make it as streamlined as possible. But we had people that were pressing 1 for customer service, but they really needed help desk. So now you're waiting 25 minutes to speak to somebody just to have them tell you you're going into another queue. So it was things like that that definitely frustrated people.
Well, also the, as in my case, having my mother's still with us down at Southgate, and totally analog, and trying to get those folks hooked into the system so that they could pay. That was one that the workaround that would I think we've resolved now as well.
Yes. And we also, one of the newer features we have, or I should say utilizing it, we did have this option with our old payment vendor, but you have what's called IVR, and that's your call by phone. For me, I find it frustrating as can be, but there are certain people that love that type of technology. But using it and understanding it and having it set up in the most smoothest possible way, that's something you got to work on. And we're now, we've made a lot of changes in the last 3 weeks. This month's gone by fast. But as you're learning stuff, a lot of it is pivot, move, and fix things as they happen.
How confident are you that all of our customers will receive a bill or be billed or be tracked and not just lost?
I'm very confident. I'd say 95 to 100% that we're going to get, everybody should be getting bills, that if there are any situations, because I can't say 100% because there always could be something where there's some setting or something that's triggering and it's happening to a small group of people. One of the ways, I've done this twice now, one of the ways to identify issues are when customers call up, right? Sometimes you can't predict an issue is going to happen or really see it or understand it or know it through all the testing and type of things you do when you make any type of change in a system, let alone changing systems. I was on a customer a few years ago, and the person was, arguably upset about something, and, we de-escalated the call, and while I was talking to him, he was going, well, you'd think this is going to happen or this or that, and I'm like, we have about, 1,100 electric at that point. It was 900 water. I go, I'm sorry, 1,000. I was like, we got almost, anywhere from 17 to 19,000 accounts that we're looking at. We don't manually scan through each and every one to make sure everything's okay. We have to make sure the overall numbers balance and all that stuff ties. So when there's an issue, that's where, you identify it, we're going to see it. If anybody does think something's incorrect, that's where, this isn't the type of thing where it's like, hey, this amount looks incorrect, and if we can't figure it out, you're just stuck with it. No, we work with you to understand what happened, and we make it right.
Okay.
But I'm confident that people should be receiving their bills, and they should be correct.
Are you actually talking to customers?
Here I have not, but I have in my past.
Oh, yeah, I was gonna
Um,
say, it's not the best use of your resources, I would think.
No, I've only dealt with 2 customers here.
Okay.
And that was just more of there was an outage one day, and I walked
Yeah.
up to the front.
I
and
mean,
there's
you're
somebody
welcome
was okay.
to, just in, other talents. Can you tell me a little more about what the billing dispute was with the prior billing service?
What was the
Dispute or problem with the prior billing
so
service?
our prior billing vendor, they went through some internal issues. I don't want to say too much because we did get a letter, it's security related type of stuff. But basically, I think what happened with them is they realized they had to focus on health of their organization. So what we were looking to do was just get 2 years worth of the bills that we had up on Invoice Cloud that people could see. We wanted to get that data, and we needed it in a certain format so we could put it in our system today. And we weren't able to receive that. They did get back to us the week before, and they were able to give us mass files of just, years worth or how many worth of customer invoices. But the goal was to have that in our system, and then we were going to even try to have it accessible on our new customer portal, Smart Hub. We weren't able to. So what that does is it just means more people now, if they're looking for a copy of an old bill, have to call in, and it's not as user-friendly as we'd like it to be.
So, from your earlier comments, it almost sound like they had a beef with us, but it doesn't sound that way. It's more of whatever their organization is, or is there an actual dispute between us?
It's more their organization issues.
Okay.
We did have one vendor that I will say, an extortion payment to get our data from them. I'm happy we're gone from them because the amount of money they wanted was ridiculous. I may have called her a thief in an email, and we may have gotten it reduced, but we still had to pay to get the minimal information we needed.
Yeah.
It was ridiculous.
Yeah, I don't know if, in reviewing contracts, I notice it more and more, exit fees and things like that, or, yeah, I call them extortion fees too, but something to watch out for, because the pricing, and sometimes it's in our reasonable discretion, and it could be 3 times the amount that you paid in a year or something, so it's really absurd, so be on the lookout when you sign those vendor contracts.
Yeah, no,
The
they
exits are
wanted
hard.
something like $100,000, and I just laughed at them. I was like, no, we're not paying that. I'm getting twice the amount of information for, 10 grand from another company. That's, no. But I broke out literally the cost of what it should cost her. But, so those were some of the interactions from our payment vendor that kept emailing. That's more, I don't think that's malicious. I just think that's how they run. We had some issues transitioning away from them too at my last company.
So will we be sending out bills like on the new system to everybody, so everybody gets a paper copy, so they can get, yes?
I'm sorry.
No, so I don't believe we have a paper copy going to every,
We do
Do
in
we-
May.
yeah.
Yeah, in May, every single customer will get a paper copy bill. And then they'll sign up for Smart Hub to get to the, paperless billing. But yes, everyone this month will get a bill.
Okay, and the goal is to get so, the only way to pay online is to be registered with Smart Hub, right? Okay.
Correct.
So, and you can't just go in and just pay, like before we used to be able, the old system, we could just go in and do like a one-time payment. We're
There-
no longer able to do that.
Nope, there is a one-time payment option. It's very similar to Smart Hub. It's just called Pay Now.
Okay.
Was that what we were having issues with the Easy Pay link?
No.
No.
The issues are more on the phone tree stuff for the payment.
Okay.
So is it, is
We
it still
do
an,
a one-time payment, absolutely.
is still an option on the website?
Yeah, you would log into Smart Hub and just pay by account number.
No, she's saying without logging into Smart Hub. There's Pay Now.
There's Pay Now where you just choose your account number to pay.
Like the same way it always was?
Yeah.
Okay.
There's also, if you go to your personal bank, we've set up what they call an OBI, online banking interchange process. So prior to this, when you went on, if you wanted to pay through Bank of America, you would type in, SELCO, we wouldn't show up, and then you'd have to go in, type in all of our address information. When you made the payment, it would cut to a check processing center, and we get the big checks.
Yep.
Now, for 90 to 95% of those, because of the banking relationships we have, those will come in through basically a e-check, which makes our lives a lot easier on our end.
Okay.
You can also pay over the phone or at retail locations as well.
Yeah, cash only at the retail locations. So one of the new payment features we have, and you could read more about this online, but is you can go to CVS and for a $1.50 fee, you can pay in cash. It's like CVS, Walgreens, I think there's Dollar Tree. We are working on a process where we are going to credit back the first fee that you'd pay throughout a month. But after that, any additional payments would be, the $1.50 would be to you. The goal of this is to help us with the, be in line with the laws for Massachusetts for having to accept cash. So in a case where like there's another pandemic or there's a lockdown, we necessarily do not have to be open to be able to accept cash payments. As well, one of the nice features is once we're fully integrated, we have AMI meters, we're fully over to Minerva. When a customer, if they are turned off, let's say for payment issues, they can go, instead of having to drive all the way here, let's say they work 45 minutes away, they could literally just go to the local CVS, make payment, and it'll automatically turn on their account. That's still in the works because we don't have all AMI meters yet on the electric side, and any customers on the communication side, if you're not on Minerva, you're not technically, the legacy video product is still through our old company. That's why as we transition everybody over, everybody will be on, or will be through NISC and will be able to automatically turn back on your service.
When you say cash, you mean debit card?
Nope, I mean cash.
Yeah, it's still around.
Wow. How
It's,
do you even find it?
yeah, it's to help support low income. And I think as of 2018, Massachusetts was the only state in the union that had that law, but I know there was a bunch others that were looking to put it in. But we've had it since the 70s. So one of the things I just wanted to say was we basically learned we have a great staff. Everybody jumped in, doubled down. You had certain people were working, nights, late nights, long weekends, around the clock to make sure everything, went as smoothly as it could go. There's a couple of people I won't name by name because they'll get mad at me, but really went above and beyond during this project. And in the end, one of the things is we now have processes we can build on, systems we can build on. That's the big thing I keep trying to tell everybody is this is a finite point in time. 2 years from now, the pain that we're going through will be forgotten. As we bring on new people, their positions or their roles and integrating them is going to be easier because instead of having to learn, kind of a process of many systems, speaking to each other through all different mechanisms, now it's one system, much more streamlined, and a lot of our goals in processes and things that we want to do are still going to happen over the next year or two. As I tell Chris, one of the nice things about NIC is they have what they call best practice reviews. So we'll set ourselves up because there's usually like anywhere from 12 to 16 month wait list. But basically you have them come out and say, hey, let's take a look at areas of opportunity, how you're using the software, and they put together a plan to help you utilize all the little features. It's something I did at my last site. I did it once after go live, and then I set one up, and it was actually Becca that had to call me while I was here because I was no longer worked there by the time it went through, but those are very, very useful as well. So any additional questions or comments on the NISC conversion?
Having been up here during that transition, I concur with your comments about the customer service reps and the level of efforts that each and every one of them did, and seeing, how they kept themselves calm and collected and very customer oriented. And I won't say I felt their pain, but I appreciated what they were going through.
We appreciate that feedback and understanding.
Seriously.
And there were, I described a couple of the negative customer interactions, but there were a lot that were patient in understanding as well.
Okay. Thank you.
Change isn't easy, and
No.
this was a big undertaking, so, kudos to the team, and this could have, this is one of these things that I feel like could have easily gone sideways real bad, and it didn't, and due to all the hard work, so congrats to you and the team.
No, we appreciate that. And I just want to say, we're very proud of our team and what they were able to accomplish.
Good.
It went well.
It's good to see an integrated system. I mean, for the last 20 years, we've been trying to get that, and it's always been this problem of interconnections, the electric and the cable and the billing and the telephone, the different software. It's been a nightmare for a long time. It's good.
Good. Thank you.
Thank you.
I guess you have our next agenda item as well, correct? On the
Yes, that's me.
cable and electric financial statements.
Exactly. So today I'm going to give you an update of the Q4 2022 financials. These are unaudited financials. The reason why we want to present the unaudited financials, even though we will present audited financials at some point, is when you're presenting the audited financials, it's kind of the time frame to say, hey, do the financials look accurate? But they don't really, it's not an opportunity to explain the situation or some of the stuff that we've talked about throughout the year. For most years, the only significant changes that'll happen will be, I think it's like GASB 68 and a couple of other minor adjustments that the auditors help us with. This year, it's a little more fluid in, and I say that because there's a couple, like I had to start this presentation getting it ready last week, we're still in the process of getting stuff ready for our auditors, and I'll be giving an update on that. But there are certain things that did change that are kind of immaterial, but I still wanted to be able to present this presentation. There's also a couple things that I'll point out that no one might have picked up other than Maria, but I just want to talk to them because they look a little odd. And I know what they are, but I didn't want to adjust the financials to not show them at this point. So with that, just hit the agenda. First, we'll go over the electric reports, then we'll go over the cable, and then we're going to jump into a quick audit update for 2022. So, taking a look at Q4's 2020 electric reports, we'll start with the budget to actuals on the income statement. Total operating revenues were above plan by about 10% for the quarter to date and as well for year to date. Taking a look at our operating expenses, quarter to date, they were above plan about 8%, and year to date, that was about 11%. Coming down to our net loss from operations, as you can see, we did hit the year with the $1.4 million loss. The majority of this is contributed to the purchase power stuff that Becca spoke to earlier, and that we have recaptured in the current year at this point. One of the things I learned while doing this process, and I was going to put a slide to show it, but is the percent changes when you have a negative number. Apparently there is not a great way to have a formula or a mathematical equation to get them to look accurate. So I did a bunch of research, and apparently for a while the Wall Street Journal would just void those even out, and now they go to an absolute value formula. But I kept getting upset with why every once in a while I'm like, how come this doesn't look right in some of the stuff I was presenting? But I wanted to share that with you as well. So we now use the absolute value formula, which is the most current that Wall Street Journal's using. Some of the areas I wanted to talk about was just from a generation expense. We had a large increase, or looks like a large increase in this year. Some of these numbers aren't really increases from a we spent more money because we needed to spend it or do this or that. Some of it's also me going through and looking at things and going, okay, these expenses aren't classified correctly, so we're starting to put them in the proper categories to make sure we're capturing things appropriately. So I just wanted to make sure I explained that. Taking a look at year over year, we look at total operating revenue. We increased 17% quarter to date, and year to date about 7%. Taking a look at operating expenses, from a quarter to date perspective, we were 42% over plan, and from year to date, year over year, and 32% year to date, year over year. Taking a look, obviously, at our net income, we are down a significant amount, which is about 96% quarter to date and 129% year to date. And that was to be expected with the budget we had put out that we knew we were going to be under plan.
Can I ask you a quick question?
Yes.
So the generation expenses that you're reclassifying, where are you reclassifying them from?
Some of them came out of distribution. Some of them would come out of general and admin as well, because there's a portion of our time that should be booked to each area, so a small amount. And then there's certain, tools and different other things that previously we were booking all to one area, but because they're being used in multiple areas, we're making sure the expense is flowing through to all of them.
Okay, thank you.
Okay, jumping into the balance sheet. Taking a look, our total current assets decreased by about $3.6 million, and the majority of this is contributed to cash, which I'll speak to in a minute. And taking a look at our non-current assets, they increased about $3 million. Total assets overall decreased about $2.3 million year over year. Now, I just want to take a look at the operating cash. This shows an $8.8 million drop. Now, there's 2.5 of this is related to funds being transferred to depreciation. Then there's another 2.5 million that is related to the amount of cash we received versus the amount of cash we paid. The last 1.2 million of this is for debt services. Okay, those are items that don't show up on the income statement, but do show up on, you know, our balance sheet and our cash flow. Now, if you look at that, it gives us a variance, and I want you to remember this variance of 2.5 million, because I'm going to speak to that in a minute. But removing that variance, there's only about $6.3 million change. And we'll go over why that variance is there. But some other notable 2022 transactions, we transferred $4.6 million over to MWEC into their working capital. That basically is just a retainer at MWEC. That's still our money that's being used to pay our bills actively every month. We had about $61K of non-cash pilot payment. I know that sounds ironic, because how is a payment non-cash? Those are basically services we provided to the town without charging. 1.5 million in capital spend came out of operations because we did transfer the full amount in 2022 of 2.5 million depreciation expense over to depreciation. Our materials and supplies did increase 145K, and so did our total AR also increased about 75K. Just things that, when you're taking a look at what contributes or adds to cash received versus cash paid, some of those items are in there. Jumping down to the balance sheet liabilities, if we take a look at total current liabilities, there is they increased about 300K year over year, and looking at total non-current liabilities decreased about 930K, and total loan repayments increased about 1.1, bringing total liabilities year over year to an increase of about $500,000. Looking at our earned surplus, there is about a $2.8 million drop year over year. And there's one thing that looks a little weird in here right now, is you can see that there's the same amount for the adjustment for retained earnings as net income. It's kind of flipped. One of the last processes of our new system is to run a profit distribution. And this, what it does, it basically clears out all of our expense accounts for the year, and it gives us our entry over to retained earnings. I had run that before this, and I've learned that we're going to run this first and then provide the financials, because it throws that money into like a holding account, and that's why that looks a little funky, why it has that exact mirroring image. But our total liabilities and earned surplus matches our total assets, so we're good on our balance sheet. Now, coming over to our cash flow statement for 2022, you'll notice I have January's starting operating fund balance of 9.9 million highlighted in green. I also have that for the starting balance of the depreciation fund, because I'm going to jump into that in a second. But basically, we went from about $9.9 million to about $6.1 million throughout the year. You can see here is the debt service payment that we referred to in the previous slide. And basically, up here would be the difference between money paid and money received, which was from the previous slide as well. Now, I want to jump into the two numbers I have highlighted in green, because basically, for anybody outside of Maria, probably wouldn't notice, but when you take a look at our balance sheet, okay, this area of the balance sheet that's showing our operating cash for 2022, the ending amount, that amount should match the starting amount, if you will, the beginning balance for the cash flow. It didn't. So I jumped in, and this is basically a conversion timing issue. And so I put a little, and I don't know how big it is so you guys can see it, but basically there were two things that kind of happened, but we normally transfer our depreciation fund money in January. That's that 2.5 million. In Munis, which was our legacy system, we had transferred the 2.5 million in January, as you can see down here, but we accidentally uploaded all those journal entries twice. So we reversed them. So you can see in Munis, you have the original entry, you have the duplicate entry, then you have the reversing entry. And that brings you to the correct balance. Now, NISC, while we went through all the balancing of the accounts and everything, we knew there were certain timing discrepancies. Here's one of them. They had this 2.5 million marked as part of their profit distribution. So what they did was they had both of those payments marked in December of the previous year, and then the correction in January. So basically, throughout the two periods, you can see at the end, the balance matches, okay? When I was balancing and accepting the conversion data, there was a bunch of stuff that we had to confirm. I knew about this, seeing it and seeing what it could hold up. I wasn't worried because it happened on prior year information, and it wasn't anything that couldn't be explained or shown. When I saw this, there was also a couple of other odd issues that we corrected where we added a couple of additional accounts and things didn't work with that. And so we had two cash accounts. So over the course of December and January, everything balanced out. And then January, February, March, April, May, June, July, August, all balanced. So I was comfortable moving forward. But I didn't want to change this financial outlook at this point because of it would have affected some of the file stuff, and I couldn't just take the new information out of the new system and paste it in the same kind of format and give the financials the adjustment that people would normally do while presenting. I prefer just to explain this at this point because I trust the information. There was potential to make mistakes going the other way with the amount of time that I had to be able to give you this information. But as we can see on the depreciation side, it happened the same way where, the correction in the money came in Munis in January, but the booking happened in December in NISC. But in the end, all the numbers balanced for the end of the year. So now, before I even move on to my questions slide, any questions?
So, 2.5 million of the $5 million difference between the opening balances, right, is for the depreciation. And the other 2.5 million was for what?
There was the cash received versus cash paid. So just what we took in throughout the year versus what we paid out. And if you're asking why on this area, why there's the double of these 2.5s, because there's two separate 2.5 numbers.
No,
yeah, okay, just want to make sure.
I get that. All right. So I guess when you did your cash statement, right? So if you did the cash statement and you just started at that off with the correct opening balance, then you could have just adjusted the rest of the, like.
Yes, and that's, so to what.
So I guess why didn't you adjust?
So I would have had to make adjustments in a bunch of different areas of the file. And I was just uncomfortable doing that with the limited amount of time to not make sure it didn't break something else. So I was like, let me present this as is and explain it. When we look at our audited financials, it's going to show differently. I just wanted to give something to give the understanding of where we're at financially for our picture, knowing that it would be a little funky off for some people. But to what Maria's saying is I could have made this number into the 12 million and then had a transfer from here down to here. That was one of the other options type of things. But I just didn't, I wasn't 100% sure at the time that that was all going to flow through and everything was going to balance, and I wanted to make sure we got these financials over to you guys with a little bit of time to look at them too.
So moving forward with the new system that you have in place now, you're not going to be presenting financial statements off of these?
Yes and no. It'll be a little different. So we do have the ability to build some in the new system. One of the things that they had as the best fix that they did was they had a way to pull information out of the system into Excel so you could present in your own format. Apparently, Microsoft is killing that link. That said, we still are able to pull down the information and paste it in. Right now, the way my file is built is you have a tab for each year. Going forward, the new years will all be in this format. So we'll be able to paste things in appropriately. I didn't want to paste anything into old cells and do different things. As well, we've built now a bunch of different what I call QCs, quality checks in it, and I keep adding more to make sure different areas of the financials tie to each other. So previously, I only had, does the GL tie to the financials? Now I have a bunch for be like, do the financials tie to themselves? Do this financial tie to this one? Because we want to make sure all the different areas are hitting correctly. So we will still be presenting with this. I am looking at, and it'll take a while to see if it's worth with their older process trying to get financials out of the system. Because in the system, they have two different ways to do it. One of them, I think, puts our financials more in the RUS format, which that's the rural cooperatives that are throughout the country. The other one, we are able to build, but it's a little wonky for how you build it. So at that point, I'd want to run both simultaneously just to make sure the information was correct. But that one, if you add a new account, it takes a lot of work to,
Put it into the right
yeah,
place, yeah.
and get it into the right area. Where once I have the newest stuff for 2023, it'll actually be easy to add an account for us because we'll just add it in two areas. I've learned that we stripped away a bunch of accounts, but when you're doing things transactionally in a system, you have to add a bunch more accounts as holding accounts, placing account, and all these other type of things. So those were all added in, and once we get those, it'll be nice.
Well, good luck with that.
Thank you.
How long has the bond got on it? How many years?
I'd have to look into that one for electric, because I think we have two bonds through MWEC. One is for the solar arrays and one is for Centec. I'm not sure if they end at the same time period. I could tell you the sheet I look at is longer, so it's not next year, but I want to get you a definitive answer on that.
Okay. With that said, let's go to cable.
Okay, looking at the cable Q4 2022 financials. Starting with the budget to actuals for the income statement, quarter to date, the total operating revenue increased about 7%, and year to date was, over plan 7%, and year to date was over plan about 4%. Taking a look at operating expenses, they increased about 5% in the Q4, and overall increased about 8% year to date from the budget. Dropping down to net income from operations, we are 15% below plan for quarter to date and about 16% below plan for year to date. Couple of the items I wanted to point out. One is it looks like head end expense jumped up drastically. This was a couple different things when I took a look into it. One of which, similar to kind of the, it's not Joel. Don't worry about Joel. One of which was how we previously booked employees' time in the last system compared to what I was comfortable with setting up as a default setting. We had a lot of stuff going directly to capital projects without having the employee have any input to that. Going forward, if we're setting up stuff as defaults, it'll be set up as expense, and then the employee will have to sign into the system to write a special timesheet, which they all have ability to do, but to put that I worked this many hours for a capital project, because we want more actuals on that. As well, we had a couple of instances with the head end where we had to do some emergency work based on some, I guess, miscommunication with the town. Even though we are in that building, we don't do all the maintenance for that building, so every once in a while something happens where stuff can come and wreck the head end in a little bit of a way, so we had to do some emergency repairs on some of those things. But that's why we had some of those increased expenses on that side. As well, one of the things we're working on, and the end-all be-all flow will still have all the expenses in the right areas, but some of them may have picked up on this, but as we're moving IT from being split between, or direct expenses split between cable and electric, to we're having all of IT's expense on the cable side and then charging out both electric and the town for those expenses. But that's still kind of a work in process, so there may have been some minor expenses that attach themselves to cable that we should have or could have been lended over to electric. But the goal for that process is to be able to change some of how we build the town to be a little more accurate on their end, but is to kind of use ourselves as a service provider, and cable is the service we're allowed to do that in. Jumping to year over year, total operating revenues for the quarter increased about 3%, and year-to-date increased about 2%. Operating expenses year over year increased about 2% for the quarter and about 5% year-to-date. Taking a look at the net income from operations, the quarter-to-date was 27% year over year, and we saw a decrease year-to-date of 5%. Taking a look at the balance sheet, our current assets increased year over year about $780K, and non-total assets increased about $5.6 million year over year, and the large reason for that is the fiber project. Total assets increased year over year about $6.3 million. Now, I just want one thing in this file, and I realized this after I sent it to you guys. The bond cash up here flipped. That's why you're seeing a little bit of a variance. That's just that was a coding thing for how the GL accounts line up to the master categories, and that's now corrected. Taking a look at the balance sheet liabilities, year over year, the total current liabilities increased about $500,000, and long-term liabilities decreased about $220K. Earned surplus for the year increased over last year about $6 million, bringing our total liabilities and earned surplus to increase $6.3 million. Jumping down to the cash flow statement, we can see we started off the year at about $14.2 million in our operating fund and ended the year at $9.9 million. You'll notice I have highlighted the transfer to the bond fund at $4.6 million. I just wanted to say this amount could be subject to change, and I'll go over that a little more in a second. But if you take a look at our beginning bond balance, we were at about $10.8 million, and we're ending the, sorry, that's flipped. We should be ending the year, it would be about $5 million. No, that's not why I had that highlighted. So it is going to change, not even subject to. Just those two numbers were reversed. It should have been a positive at the top and negative at the bottom. What I was going to get to with the bond funding is just how we track this type of expenditure. So basically, we have direct and indirect labor costs, which comes from our payroll. We have materials, which comes from our inventory. Then we have contracted services and supplies, and that comes from AP. when we're looking at the project as an overall, there's different ways to look at the costs. One is an overall project cost. The other is the cost to be capitalized each year, and then we have the bond cost. Well, in our legacy system, we had somewhat limited functionality of our work order module. We were basically able to put labor into it, but we really weren't able to put AP expenses. I believe it could handle that, but we didn't have the internal process flows or the setup in the system to maintain those type of things. So ideally, a lot of times when you're tracking a cost of a project like this, the easiest way to do it is as the cash leaves the door. So, we just received a bunch of bond invoices, we pay those through AP, we track that cost, any of the inventory or anything like that is tracked at the AP level. Then at the end, you kind of look at, okay, what are our payroll costs? And you kind of just add those to the cost of the project. Well, we had some issues with that because just tracking that information from a work order perspective wasn't all there, and that would have been the ideal scenario. We also don't have a defined work site, if you will. So I was on a project like this where we had a substation we were building. Well, all the materials went to the substation. If they went to the substation, they were used in the substation, and that was it. Well, we have a defined warehouse. We also have inventory shortages. So there's certain points where we have to transfer our inventory potentially from the bond project over to regular inventory so we can start doing maintenance on our fiber system. With that, we had to kind of abandon the AP method to say all these costs are for the bond. So now basically we're looking at what cost hit our CWIP for this process throughout the year. Because if it hits CWIP for the fiber to the home project, that is cost that is bondable throughout that year. I did an analysis, but I want to go back over it again, and I want to just talk with our auditors about it. That's why I had that as subject to change. Originally, when we figured out our process of going through the AP and the payment stuff wasn't going to work, we had a couple different ideas for how to do it, and I think we've settled on one that should work. So this process going forward, it's going to be a manual evaluation, and we already do a different manual evaluation to see what should be capitalized year over year, or every year. Ideally, if we were to set this project up new and set it up in our new system, we could create a blanket work order called Fiber Project. For every node, we'd have a separate work order underneath it. They'd have kind of a parent-child relationship. And as Joelle tells me, this node, this node, this node, we could be is online. We could start capitalizing all the costs with those. That stuff we're looking forward to. We're kind of stuck in a conversion flow for those type of things.
So the bottom line.
Any additional questions?
So what's the bottom line takeaway of both of your reports? 2022 looks like it was pretty challenging. We had shortfalls because of the cost of energy and fluctuations. And
Yes.
looking forward, or currently, we've been able to recoup some of those losses that were identified in the electric side by
Yes.
virtue of the GTA. And so we're flush and maybe have a little bit of a nest egg when
Yeah.
we get done. And then
Well, yeah, we hit pretty on target with cable. There was a couple of unknown things going into cable, and there's still a little unknown this year because how quickly are we getting people off certain services or onto other services? That changes either our expenses and or our revenue. And a lot of that, as much of the transition didn't happen in 2022 as it could have. So we're expecting to see more of that in 2023, and then a lot of it before the end of 2024. On the electric side, we kind of knew it was going to be an under-planned year, and it came in as expected. But like you said, we have corrected that, and if there's any overcorrection in there, that's good for the end of this year.
Any other questions, comments?
Opening balances are off again for the cash?
For the cable,
Yeah,
yeah, it's going to be the same.
because of the cash in and cash out.
Yes, and I think that's the cash in, cash out, because we were actively tracking the bond. throughout the year through the AP process until we realized we started figuring out certain things weren't going to work as we were buying stuff, and we're like, oh wait, all that went here, but we're switching that over to be using it for this. We don't want to bond that. So as we started realizing that, we pulled it out, and that, so that could be those dollars that were originally pushed in for that.
Okay. The other thing that, I think it was on the other set too, and is the op-ed and the pension accrual went from 0 to.
Yeah, so we don't,
I know that doesn't come from you.
Yeah.
That's just, that's the actuaries, but, I mean, there's a dramatic change from,
so we don't have that information yet in the financials, I think. I believe that comes with our auditor adjustment. So
Okay.
that becomes the GASB 68 and 65? I don't know the numbers off the top of my head, but those are the two, like when we presented last year now, we did the difference between the unaudited versus audited. Those were the main differences. And going forward, that's the only differences once we present this report we want to have. This year, I just wanted to make sure I started presenting you with something, or you thought I just disappeared.
yeah, but I guess the point that I'm making is that, there's been a dramatic change from the actuarial assumptions, and is it interest rate motivated or?
I'm not 100% sure, but I do think that is part of it. If my understanding is correct, they basically take some sort of forward look to say, based on the money you have today and based on the current situation of what we see for a liability, and they try to make sure we're funding it appropriately, what that would be for the future.
Yep.
How they do that, I am not sure.
I mean, it's based on life expectancies. We've
Yeah.
got a lot of new employees too, so a lot of retirements, so that's probably what's impacting that. It's just a large number on the financial statement that we just need to be aware of, right?
Yep.
Like a big change.
Good. Well, no other comments, but thank you very much. And,
Thank you. So real quick, I just want to give an auditor update. Our auditor field visit is May 23rd to the 25th, so they're actually here today, right now. So after this, I will run over to see if they're in the office or not. We plan to present the results either in July or September. We figure we'll talk to you guys about that in the next meeting. It's basically, once they start to do the field work, they'll give us an accurate gauge of if they could make a July meeting. Our auditor, Jim, has offered to come in June if there's any questions or you'd like some sort of update. I don't know if it'll be worth it at that time, because you just might be paying to hear him come in and say hello. But basically, we did delay the field visit. It was originally scheduled in February, and we pushed it off due to the system conversion. We were about a week and a half out, and we didn't have things like our cash fully reconciled and all these other things, which is to the penny, by the way. I was very excited about that. Sorry, accountants,
Yeah.
$65 million, and you get it to the penny, it gets exciting.
That's the way it should be.
I know, I know.
that's the way you have it all.
It's one of those things where as the accountant, you want it that way, but it doesn't always work out that way. But basically, this was the earliest time frame that they could get back to us from that delay. So that's why these are pushed off this year. But going forward, we hope to be back on the schedule as we start to move over to the new system processes and reports.
Thank you.
Thank you.
Okay.
So will that July meeting then be pending if the financial statements are, like if the financial statements aren't ready, will we cancel the July meeting?
Depends on what line of business we have, probably,
Yeah, okay.
to be determined. Okay. Yes, Mr. Roy, you get a general manager's highlights?
Sure.
Thank you, Mr. Zacco.
Thank you.
I think fortunately, a lot of what's in the highlights have been covered through other agenda items, so I'll keep it brief. We added a few legislative bits here just to stay on theme and I guess inform folks that might not be aware of some of the other activities throughout the region. We did talk about the rates, so that one I'll move past. Just always trying to keep an eye on the situation with transmission line investment. So again, with some of the court activity in Maine. That line might begin soon.
Yep.
I know he's stepped out, but we have that.
There's also a mention of one in New Hampshire.
There's one in New
So are there
Hampshire,
these are two separate
two
lines.
separate lines that we're
Bring
keeping our
hydro
eyes
down?
on.
Good.
One of the important initiatives that we're exploring through MWIC is transmission line investment. One of the best public power, or regional, if you will, as well, because it was everybody, but the Hydro-Quebec connection has been one of the best investments made perhaps ever in the area for electricity. So we're looking to keep an eye on that. Cybersecurity, I thought this was noteworthy, that NERC recommends including cyber attack scenarios in the planning assessments. So just nothing more specific than that, except that we are continuing that effort. We're expanding cybersecurity insurance through some of our defense mechanisms. And we also have further assessments for physical attack as well. So we're looking at both fronts on that. I included, just as an interesting piece, the gas stove. I'm sure everyone's seen that in the news, but I just wanted to add a quick perspective on that, as well as with some of the recent history articles about where especially public power utilities have come from, where going back to the 1950s, where they had electric appliances, laundry machines, everything in the lobby. There's pictures of SELCO, if you will. When you were a customer, decades ago, you'd walk through and you'd say, oh, maybe I should get this electric range instead of the gas range. And so one of the things we're actively monitoring is the fact that not just EVs and heat pumps, but there are all these aspects of electrification that are going to need to be factored in as we plan the grid. And I do believe it is a good thing for our business overall. So that's, as a electric energy firm, but that's just something we're also monitoring as all these appliances face increased pressure to go electric. That adds complexity to our side of things.
Gonna have to be an awful lot of upgrades to people's services, huh? To handle all this stuff.
Exactly, and again, just in the interest of brevity, but that adds pressure to our customer service representatives, because now we're looked at, which I believe we should, I advocate for it, but we are the experts that the customers should feel like they can turn to us for advice. And to your point, do I need a service upgrade? Do I not? What does this mean for reliability and all of these things? So I just wanted to point that out. And then the last article I included on there is just a link for your reading pleasure, just keeping tabs on the status of wind. But we're actively monitoring all that and looking to incorporate those projects.
When do we actually expect any of these wind projects to actually produce electricity?
Potentially end of next year.
And
Yeah.
next year.
Okay.
Yeah, there's cables being laid and
Yeah,
work being done for the first ones off the
sure,
grid.
yeah.
Yeah.
Okay, good. Okay.
I believe there was an article on that too. I didn't include it
No, that's okay.
with the cable part. But
Where were you? Can I just ask what do you
leverage?
where do you source?
That's the secret sauce.
I know. I'm curious because
That's why he gets paid the big bucks.
There's I have several news alerts that I leverage for staying tuned into the
utility
region.
drive.
But we aggregate it. I mean, we have anywhere from the Google alerts that come in. We have MWIC keeping their ear on things, so I get those reports. McGuire Whitney in DC for more national news.
Even a monthly item on a phone call for the
PhD.
For policy making committee for American Public Power, and in those minutes it usually includes a legislative update up to the minute as to what's going on in DC, and then I forward that to Chris, who then sends it to everybody in the public power business in New England.
That's good.
So we share the wealth, and it just kind of keeps everyone up to speed as best we know.
Yeah.
Okay, so I just wanted to cover perhaps the most important section. We had some noteworthy human resources activity. So the first one, as you may have seen some of the emails go around, Ralph's not here, but Scott Stark retired after 41 years. That's a tremendous asset to SELCO. And we're fortunate that he was selected for the Thomas Green Public Service Award. That ceremony went great last week. Unfortunately, I couldn't make it due to a conflict, but Ralph went, and as another long-standing SELCO employee, so they had a great time there, and his family was there, and so I'm really pleased that he was able to get that. So congrats to him for that retirement. Related to that, we did conduct internal interviews. So Sean Quinlivan was promoted to fill his spot as of today. So we're excited for that. He's been really proving himself and stepping up to the plate and taking additional classes outside of work, and so he's doing. And that was a tough one because we also, there was another candidate very similarly qualified, and so we're in a difficult yet fortunate position that we had to do that. So, but Sean starts today, and then Bob. His news.
Okay, next item.
Yep. So, yep. So we had the Philip Sweeney Public Service Award. I was able to present to Bob at the MWIC conference. I'll have to say, I mean, when I was trying to just read the list of accomplishments, I couldn't memorize it. I mean, it was like 10 pages long, and I think I left a few out, which I apologize for.
I had no clue. I thought the only reason you were holding me from dining and dashing after the evening's dinner was that they were going to sing "Happy Birthday" to me. It was my birthday, and then get called up there. And it was for the first time in my life. I think I was speechless.
Yeah.
Yeah, yeah.
Nice. So that was really good. And then just we were in the ongoing search for a new CSR. So if you know anyone, have them submit a resume. And then the rest, I guess, just in the interest of time, we've covered most of this. We had another successful Arbor Day event. We covered the auto pay. I was honored to be asked to be the participant on the Town Manager Download podcast. So if you tune into that, there's some public power commentary. And I hopefully have my facts straight, but I believe I was the first guest, so we broke the ice on that. And we also just, again, ramping up our efforts, and again, I feel like energy awareness continues to escalate. So we created this public power flyer that will continually update. We had that available for town meeting members as our first target audience for that. So if you have a need or interest in that, we have that electronically or certainly hard copy. And then the last thing I did want to point out, the Cultural Council box wrap project. So we're working with them. We opted for a vinyl wrap on 5 junction boxes as part of an effort to facilitate, our art and local artists. So just as you might see some more decorative junction boxes out there as that project progresses. And then the rest, I'm certainly happy to answer any questions on. We talked about the rate in the integrated resources side. That's our most noteworthy item. The town meeting results, I think, is fairly well known. And then our standard operational updates.
Where are you gonna keep your lamb and sheep for the,
Oh, did you saw that? Yes, I should speak to that. Yeah, that's, we stand to, I'll just speak to that one real quick. Yeah, we're looking at a creative option. Right now, our solar fields are mowed traditionally at a fairly high cost, and for about a third the price, we can have sheep graze. And so we have a local,
And we don't want goats because they climb up on
and
the
goats,
solar
and
panels.
goats will climb, so you
really?
have to have a specific sheep variety. And they will come every few weeks. They'll keep the grass.
So it's a little contract, they bring them in and.
Yep, yep. He brings
Is it
them
gonna
in.
look even? Nice,
yeah.
even lawn?
It's a good, I don't think it'll be,
Not gonna have the lines.
yeah.
Yeah.
Quite,
Yeah, it's not going to look like Fenway
They are
Park
trained to walk in line file and.
Really?
yeah.
if they have a bad day.
Oh,
Sorry.
And then, yeah, not to leave cable out. We have fibers progressing. As you can see, we're continuing to work through the bids. We awarded another bid to D-Mark, who won the last bid, and they've been doing a good job. So I think that should work out just fine. We talked about IC. The next big hurdle is the Minerva SELCO stream conversion as we try and migrate away from the legacy plant by August of '24 as the decryption software reaches end of life. So there'll be more on that in the coming months. But we're now with the go live conversion behind us, we can start to ramp up efforts on the stream.
Good. And there was the red circle, the blue circle of death on the Fire Sticks, right? But we found out that was whether a firmware or whatever, a specific issue just with the Fire Stick, it's been resolved, correct?
Yeah, we went to a new version of the application and it had issues, which was supposed to be vetted, but got through anyway, so we reverted back to the previous version. It worked fine on all other platforms, just not the Amazon Fire TVs.
Yeah, okay. Good. Okay, thank you. Any other questions for the general manager before we move?
I have one quick question.
yeah, go
Sure, sure.
So I'm just looking at the pie chart for the fiber.
Oh, yeah.
And so it looks like we're at like 26% have transferred over and we're still 74% on the legacy. Is that what we plan for at this point? Really?
It
Okay.
is,
Yeah,
it
just
is.
wondering how we were tracking.
Yes, and we continually do the math on how many conversions we'll have to have per day as we approach 2024. So we're doing, and fortunately, we have a higher number of installers.
Yeah, we talked about that last meeting, yeah.
So we're, that's very much on our radar, and that's the mountain we're climbing.
Okay.
Great.
Fiber follow-up. I see there, in the report that we normally get, it's node 14 through 67, skipping around some numbers. How many nodes are there? And is there a map that goes with that, if folks were interested to see that?
So yes, before you correct my misstatements, we have 70 ish nodes, and we try and keep that updated on this the project website,
Okay.
just to keep that. I think that's a important piece of knowledge. So there's 70 ish. And that's the stat I keep in my head. And we keep that map updated on the fiber website.
Good. Okay, the next item on the agenda is schedule next meeting. We've done that. That's going to be the 27th of June at 0800. Next, we need to go into executive session, which will require a roll call vote. But we're going to go into executive session and then come back into open session to close the meeting or to vote on what we determine in executive session. So with that, we have a motion to go into executive session and with Mass General Law, Chapter 30A, Section 21(1)(3), in order to discuss strategy with respects to collective bargaining, local IBEW 326.
So moved.
Second?
Okay, we'll do a roll call vote. Mr. Ravello?
Yes.
Okay.
Yes?
Yes. Bob Holland, yes. Tony?
Yes.
And
Yes.
Yes, okay. With that, we'll close the meeting at 9:28 to go into executive session to return, eventually to return to open session. Thank you.
If you just push it all the way, it'll stick. Yep.
It's 9:40. We've come out of executive session and come back into the open session for the Tuesday, May 23rd, 2023 meeting. Once we're all set? Yeah, okay. And then, so the last item we have coming out of executive session is to consider approval of the collective bargaining agreement expiring December 31st, 2024 with local IBEW 326 as amended and as discussed in executive session. So do I have a motion to accept?
So moved.
Second.
Okay. And all in favor of approving the collective bargaining agreement as discussed?
Aye.
Aye.
Aye. Okay. Opposed? No. Looks like we're good to go. And with that said, do I have a motion to adjourn?
Second.
All in favor?
Aye.
Aye.
Thank you.